Mark Minervini is one of Wall Street's most remarkable success stories. He has attained over 30 years of super performance in the stock market. The U.S. investing champion was first introduced to the public by Jack Schwager in his third book, Stock Market Wizards, in 2001. 12 years later, Mark wrote his first book, Trade Like a Stock Market Wizard, where he explains in detail his time-tested trading system, thanks to which he achieved phenomenal success in his long career. In this video, we have gathered the most important takeaways from the book, presented in the author's own words, and divided them into two sections: super performance trading and super performance stocks. Please subscribe in order to stay tuned. Super performance trading. Success in the stock market has little to do with luck. On the contrary, the more you work a sound plan, the luckier you will become. Ultimate dedication is required to attain victory in the financial markets. The greatest success comes when you finally decide to forget about the money and concentrate on being the best trader you can be. Then the money follows. Have confidence in your ability. Learn to do your own research and think for yourself. Your own resources are far superior to outside research, tips, and so-called expert opinions because they're yours and therefore you can keep tabs on them. Practice does not make perfect. Only perfect practice makes perfect. In fact, practice can make performance worse if you are practicing the wrong things. You can still have occasional success even if you're using flawed principles, but you will not generate consistent returns. Consistency is what separates the champions from the amateurs. The reason most investors practice incorrectly is that they refuse to objectively analyze their results to discover where their approach is going wrong. They try to forget the losses and keep doing what they've always done. Attaining super performance in stocks comes from doing things that are different from what is obvious or popular. This is often misinterpreted as risky. Applying conventional wisdom produces conventional results, not super performance. As you observe and analyze the market, be open-minded and willing to do things that most people won't do. Growth comes at the expense of comfort. Go boldly to what you want and expect a few failures, a few disappointments, and a few tough days. Accept them as part of the process and learn to say, "Thank you, teacher." How much can I lose? This is the most important question to ask before entering a trade. The most important goal is the protection of your trading capital and the gains you have made over the years. You should have a profit protection mode. Avoiding big losses is one of the most important factors for earning money from stock trading. Putting 10% stop loss per position will help a lot. You can't control how much a stock will go up, but you can choose if you want to take a small or a big loss. Always ask yourself if you still like the positions you're having at the end of each day. Preparation is the key. Right now, somewhere out in the world, someone is tirelessly preparing for success. If you fail to prepare, that somebody probably will make big money while you only dream about what you could have been and should have done. Good trading is boring. Bad trading is exciting. You should choose if you want to be an exciting gambler or a bored rich person. Super performance stocks. Most super performance stocks are relatively new to the stock market, around 10 years after their IPO. Most of them have been private companies, and through the years they have a proven track record with good earnings and growth. Usually, the biggest growth of a company is in the first 5 to 8 years. Super performance stocks have 4 cycles. 1. Consolidation. 2. Accumulation. 3. Distribution. 4. Capitulation. You must wait and do not buy the first cycle no matter how tempting it is. You need to buy in the second phase. The goal is to buy the stock at the right moment when it's ready to move up, not to bottom pick it all the time. Also, avoid buying the stock in phase 4 no matter how attractive the price is. Instead, go short. After a company makes an IPO, it may take several months until a good enough base is built. Some stocks do a base that can last from 5 to 26 weeks. During this period, the stock moves sideways and is expected to make its next move on the upside. Always focus on the leaders. Most super performance stocks are so big that their brand and their market position are hard to be reached by the other competitor companies, even if they had unlimited capital. More than 90% of super performance stocks are coming from a general correction on the markets or a bear market. The key to success is to do your job when the market is in a correction and be prepared when the market turns around so you can make the big money. Never bet on a fundamentally good idea if the chart doesn't prove the idea is good. Always search for a confirmation from the chart. If you enjoyed this video, you are sure to like our summary of Paul Tudor Jones' interview in Market Wizards. Thank you for watching. Please check our channel for more videos like this.